Now back to Inside Real Estate. Here's Mike the Realtor.
Hey, folks, we are back. Website, InsideRealEstateRadio.com, InsideRealEstateRadio.com. Connect there with myself, all of our partners. Lots of great information on the website. Good stuff. And, of course, we hit all the stories on the Pinterest page as well, so connect with us there. Time to talk a little bit of insurance. And, of course, we've got our expert panelist in insurance, Mr. Richard Tonica. His website, richardtagency.com, richardtagency.com, over at the Goosehead brand. Hey, how we doing, Richard?
We are doing fantastic. How are you doing today?
Excellent. Good to have you back live in studio here. What are we going to learn today?
I don't know if we're going to learn anything, but what I'm going to talk about today is actually what I deal with is making sure that people are covered. And your home insurance, if you have a mortgage, your home insurance covers really the mortgage company. Whoever's covering the loan that you're paying monthly, your home insurance is going to pay them first, and then you get the money. If there's a total loss, the bank is going to get their money, then you get what's left over.
Right.
Your auto insurance covers you for damages to other people's car. It doesn't always cover you for damage to your own car. It covers you for the basic liability covers everyone else but you. And so you have those two things. Your home insurance, biggest investment for most families. Your auto insurance is where most of us are going to have a claim at some point in time in our life.
Mm-hmm.
The biggest, or I don't know how to, the biggest potential risk to your family's way of life is losing your income. If you pass away, your life insurance protects your family's way of life. And so it protects your biggest investment. It protects your family if something should happen to where if you pass away in an auto accident or whatever happens. And all this came about because I had a few friends that I'm not extremely young, but I'm still on the younger side. And too young for having friends that pass away from illnesses and anything other than accidents.
Sure.
And some of my friends have passed away with no life insurance, which means their kids are stuck with all the bills. And if they have a spouse, then they're stuck. If you're in a 2-income family and you need that to survive, the bank's not going to say, oh, yeah, don't worry about paying us this month for your mortgage. Mm. They're still going to want their money.
Right.
And so your life insurance, the way if you wanted to set it up to make sure that your family is covered, at least get it for the loan amount of your home. That way, let's say you have a $250,000 house, but you can't afford the life insurance for $250,000, or you're looking at whole life or term or universal. There are many different, just like Goosehead. Okay, let me back up. Just like Goosehead, we'll have many different carriers that we shop your auto, home insurance for, and your commercial insurance. We have the same thing on the life side also. So it's not just going to be one company that we're pricing out. It's multiple companies that we are going to go out and find the best opportunity for you.
Right.
And to say that it's not going to be cost effective, we have no idea. I've had customers with high cholesterol, diabetes. Just because you've been diagnosed with an illness or something doesn't mean that you're not going to be qualified for life insurance. And that's one of the beautiful things about our business model is going out there and saving you time and money by shopping all the different carriers that we offer. And so there's this thing. Let's say you have a $250,000 house. You may not need $250,000 10, 15, 20 years from now. In 10, 15, 20 years from now, you might only need $100,000. So there's a thing called stacking where you have two policies, one for $150,000, $150,000 life term policy for 15 years. Then you get one for 30,000. One for 100,000 for 30 years. If that's lower than having a $250,000 life insurance policy for a term of 30 years, which is the basic, for most of us, that's going to be the length of time that we're going to put on our house. Mm-hmm. So you look at the $150,000 for 15 years is going to cost X amount. Usually it's going to be a less amount because of the simple fact that they're not having the risk of paying out over 30 years. They're only assuming the risk for 15 years. And then you take the lesser amount, the 100,000, and do that for 30 years because you're going to pay a little bit more on a 30-year term policy than you would a 15-year term policy. But you're using the less amount because as time goes by, you have put more equity into this house, and therefore you're not going to need as much to pay it off in the end. And so when you're looking at this, everyone's life is different, and your needs and your ability is going to be different. And we work within your budget. Whatever your budget is, we've got a plan that's going to be able to fit them. And going through and making sure that, there are some companies that when you're taking out a big mortgage will require this. And it's just one of those things that every individual homeowner, if you have a mortgage on your house, you really should look at this, because what happens if you pass away and your money or your revenue is lost? How is your family going to survive without your income and without you? And you may just look at not just the husband or the wife or whoever the breadwinner is in your family. If you're a stay-at-home mom or dad, it's just as much that they get insured as well, because the person that, let's say you have a one-income family with two parents. That parent that's still working, now they're going to be left with childcare and everything else that they didn't have to do before. Mm-hmm. And so the increased cost of having a stay-at-home parent that is no longer with you is astronomical as well, because the strain that it puts on the family. In our house, we say that the hardest thing, my wife has the harder job out of both of us because she has to deal with the kids. And I will tell you, after a couple of days of being on holiday break, I'm right there with her. I was just like, honey, I know you have a hard job. I can't imagine doing this every day. She loves it. It's her thing, but oh my goodness, for me, there's a reason I work.
When's the holiday break over? Well, this is a good point, because if you don't have life insurance, and you really do, life insurance really is thinking about your spouse.
Yes.
Thinking about your family, your loved ones, because and especially the single income homes, you've got to do it. And then the dual income homes, honestly, you have to do as well, because then you're forced with the question, okay, well, if you didn't have that life insurance and you lost that income, due to someone's death, then you're forced to, totally change your lifestyle.
Exactly.
It's now you got to come down to one, income and totally change your lifestyle, get out of the house, and there's so many things that could happen at that time.
Because
what if it's a down market real estate wise, you can't get out of it what you wanted to, all these different things, who knows what's going to happen,
Well, not just that. Most of us are going to think that in our own, if we have a corporate job, you've got a small life policy, and you may not have a standalone life policy. What happens if you get laid off, and in between you being able to find a job, you don't have that life insurance policy? And normally that life insurance policy is only one, maybe two times at most your annual salary. That doesn't go as far as you think it goes.
Right.
And that's the reason I look at, what is your mortgage? Let's start there. And then we'll have the conversations. Is it a pleasant conversation? No. But it's a conversation that anyone that is absolutely preparing to do the right thing for their family needs to have.
Right. And here's one way to maybe keep those deductibles, maybe those premiums down, and that is don't go to the doctor. Because then, when you go to your insurance guy and they're asking about, what do you got? Well, I got the, this and I got that and I got this. Hey, if you don't know, you don't know.
Exactly. Every time
that's bad, Mike.
Every time I go to a doctor, they say something's
idea?
wrong. I'm just like, I don't need to go to you anymore.
Yeah,
That's
just
right.
don't go.
You're a quack.
If you don't get the bad news, you don't know. Just kidding out there. That's just for all you crazy folks out there like me. No, yeah.
But
so
I like Richard that about you thinking outside the box and stacking.
Yeah.
That's a great point.
It is.
Yeah.
It really is. It's my way when I'm dealing with a customer, trying to be the most cost effective and give them the best value.
Right.
And that's what I always do in everything that I do.
Good.
Yeah, very good. Folks, you got to think about that. There's no doubt about it. And really it's you have to think about your spouse and your family, when it comes to life insurance. And, there's a lot of different options. This is a very complicated topic, so we're not going to hit it all, right now. But what you need to do is you need to call Richard, and you need to get into this conversation, have that adult conversation. And, you need to be thinking about it. Yeah, for sure. RichardTAgency.com is the website, RichardTAgency.com. Give Richard a call. He's going to take care of you. Folks, we're going to take a short break. See you in a few.